Short-term rental investing, which is sometimes known as either Airbnb or VRBO hosting, has been one of the hottest strategies for real estate investors over the last several years, and with very good reason because it has a lot to offer. But new data from AirDNA, which is a company that provides data to the short-term rental industry, suggests that right now, even in this crazy market, it could be the best time ever to invest in short-term rentals. What's going on, everyone? This is Dave Meyer, Vice President of Data and Analytics at BiggerPockets, and I am also a short-term rental property investor myself. So this topic is of particular interest to me. Today, we are going to talk all about why short-term rentals are such a popular investment strategy and why there's never been a better time to get into short-term rental investing. We also have a little gift for you, so stick around for that. And before we get into all of this, as always, I do ask that you give us a thumbs up and subscribe to the BiggerPockets YouTube channel to get more great content just like this. Okay, short-term rentals. If you're unfamiliar, this is a strategy where you buy a property, but instead of renting it out long-term tenants, you offer the property up on Airbnb or VRBO or any other vacation rental website. And this strategy has gotten really popular recently, and for good reason. First, it offers something that is pretty tough to find right now: cash flow. I talk a lot on this show about how cash flow is getting increasingly hard to find, primarily because home prices are rising so much faster than rents. But short-term rentals still offer great cash flow potential. Of course, you need to have a good property in a good market, just like with any investment. But short-term rentals have proven to offer cash flow even in markets that typically don't offer good cash flow, like Denver or Austin or Seattle. The second thing I love about this strategy is that the markets that tend to do well for short-term rentals are also high appreciation markets. Just think about where people go on vacations, like ski towns or lake houses or big cities like Miami. They are markets that have grown immensely over the last several years. So short-term rentals offer the option to get both cash flow and be in these great markets that have huge appreciation potential. So there's good reason a lot of investors are getting into this, and it actually looks like things are getting even better. To be honest, at the outset of COVID, I was pretty worried about my own personal short-term rental. I thought that travel would come to a grinding halt and the property would sit vacant for months. But it seems like the exact opposite actually happened, and COVID accelerated this existing trend of people shifting away from hotels and towards short-term rentals for their vacation and travel needs. To back this up, I got some data from our friends at AirDNA who provided us with some really cool data, which I'm going to show you in just a minute. But first, I wanted to mention that if you are into the short-term rental market or you're even thinking about getting into it, AirDNA is an incredible source of data. I use it myself, and it's been extremely valuable to me. And if you're interested in learning more, there is a link to their site in the description below, and you can use the code POCKETS, 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 for a $10 off your subscription to their Market Minder feature. All right, let's get back to the data itself, though. When we look at this data, there are two terms you need to know. The first is occupancy, which is how many nights in a month your short-term rental is rented out. And the second is ADR, also known as average daily rate. And that is basically the average amount that guests pay to stay in your property. Now, to figure out your cash flow, all you have to do is multiply your occupancy by your average daily rate. So naturally, as an investor, you want both of these numbers to be as high as possible. And what the data shows from AirDNA is that both of these factors are up big over the last few years. This chart shows that 2021 has been the best year on record for occupancy, or at least dating back to 2018, which is as far back as AirDNA's data goes. So despite all these restrictions and limits on travel, the demands for short-term rentals is up significantly over both 2020 and 2019. Just look at the difference between the yellow and green lines throughout the year. Occupancy and demand, as demonstrated by occupancy, are up. But what is even bigger news to me is that the average daily rate across the entire US is up 22% when you compare July 2020 2021 to July 2019, and that is obviously really big growth. If you put these two things together, the increased occupancy plus huge growth in ADR, that means a lot more cash flow for short-term rental investors. But not all short-term rentals are the same. It's no surprise that some types of properties are going to do better, and some kinds of markets are going to do better than others. And luckily, AirDNA has provided some data on that, and we can dive into that right now. This chart here shows that there is a big difference in demand by location type. Make sure to note that on this chart, the y-axis is a little funky. The 0% is in the middle, so any line that is below the 0% had negative growth, and anything that's above obviously had positive growth. And the big takeaway here is that small cities and rural areas are absolutely exploding, along with destinations like resorts and ski towns, mountains, while large cities, on the other hand, have really taken a dramatic hit. And those large cities, fortunately, are starting to recover, but they have yet to return to pre-COVID levels. On the other hand, small city demand remains super high and is way over 2019 levels. As an investor who owns a short-term rental myself in the mountains, I can confirm from my own experience that demand is higher than it has ever been. In addition to location, guests are also choosing larger units. This awesome chart shows that big units are up huge while shared and private rooms remain down. And of course, this is just common sense. No one in the world right now wants to share a room. It's a pandemic. And many families on the other side of things see these big houses that they can rent are a way of getting everyone together for a long period of time. So right now, the data suggests the bigger the better, and personally, I think this trend is going to continue. The last thing I want to show you today is that demand is highest for luxury properties. Maybe people are spending their extra money on vacations more than they did in the past, or maybe people just value staying in a super nice place after a year of being stuck in the same house. I don't know, but the data is clear. There is more upside for luxury than there are in the lower end properties right now. All told, this data is super encouraging for short-term rental investors. We've seen that occupancy rates are up and the ADR is up across the entire country, meaning there is more cash flow coming into this market. We've also learned that large, luxurious properties in small cities or vacation destinations are performing best right now. Whether you're currently a short-term rental investor or you're looking to get into the market, this could be a really interesting sweet spot for you to look at for your next purchase. If you are thinking about making a purchase in the short-term rental space, I do have two resources for you. First is AirDNA, which I honestly truly believe is the best short-term rental data on the market, and you can use the code POCKETS to get $10 off. And the second thing is I put together a guide for analyzing short-term rentals earlier this summer, and you can find that entirely for free on BiggerPockets.com. If you're thinking about getting a deal, it's super useful, so make sure to check that out as well. Thank you all so much for watching, and thank you to our friends at AirDNA for providing the great data for today's video. I'm Dave Meyer, and I will see you all next week.